Today, Coinbase's earnings reveal trading revenue dipped in the second quarter. Bitcoin launderer Ilya Dutch Lichtenstein pleads guilty and admits to a massive Bitfinex hack. And BitGo's Matthew Ballensweig, who was recently hired to lead the crypto custody firm Settlement Network, breaks down what's driving prices right now. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Major cryptocurrencies holding steady to end the week as today's jobs report shows the pace of hiring slowed but remained solid. At noon Eastern, Bitcoin traded around $29,200, Ether traded above $18.40, and Litecoin traded around $83 2 days after the network underwent its third halving. For the week, Bitcoin is down 0.2% and on pace for its sixth weekly loss in a row. Ether is down 1.5% and on pace for its third consecutive weekly loss. Okay, let's talk about the top stories. Coinbase's trading revenue was slashed in the second quarter as the SEC turned up the pressure on the exchange, according to its latest earnings report. Coinbase revealed that trading fees fell 13% from the first quarter and by half from the same time last year. The dip led to a $97 million net loss, slightly higher than in Q1. However, the loss was still narrower than analysts expected. Revenue also beat expectations thanks to cost cutting, higher transaction fees, and interest income. In a shareholder letter released yesterday, Coinbase acknowledged that the last few quarters had been challenging and noted that by strengthening its financial health, the firm is well positioned to generate the resources needed to keep investing as the company focuses on building the future of crypto and helping drive regulatory clarity to update the financial system. The SEC sued the crypto exchange and its rival Binance 2 months ago, alleging that Coinbase traded at least 13 crypto assets that are securities without them registering with the regulator. Around noon Eastern, Coinbase rose about 0.8%. Next, a New York man admitted to being the original hacker in the 2016 Bitfinex cyber attack, stealing $4.5 billion in Bitcoin. In federal court yesterday, Ilya Dutch Lichtenstein made the bombshell admission while pleading guilty to laundering the stolen Bitcoin. That plea came before that of his wife, Heather Morgan, who pleaded guilty to money laundering conspiracy and conspiracy to defraud the United States government. Until Lichtenstein's admission in court, it was not publicly known who had hacked the crypto exchange. The couple was not charged in the hack itself. Lichtenstein, who is from Russia, faces a maximum possible sentence of 20 years in prison. Morgan, an aspiring rapper known as Razzle Khan and the Crocodile of Wall Street, faces a maximum possible sentence of 5 years in prison. Finally, British fintech firm Revolut will suspend crypto services for U.S. customers. Starting September 2nd, customers will no longer be able to buy crypto on Revolut. Buying, selling, and holding will be disabled entirely starting October 3rd. In a statement to CNBC, the company pointed to the U.S. regulatory environment and crypto market uncertainty as the reasons why Revolut and its U.S. banking partner suspended access to crypto in the U.S. The spokesperson noted that the U.S. crypto wind down will impact less than 1% of its global crypto customers. All right, back to markets for our main story. I caught up with Matthew Ballensweig. He was formerly at Genesis and just tapped to lead BitGo's Go network. He breaks down what's moving crypto prices right now and provides his outlook for what will drive the next cycle. I want to start broadly, and I'm going to let you take the lead here. Can you give us a market update? We follow this closely, and of course, if you're just looking at prices, there's not a lot happening on the surface. We seem to just be in a big lull until the next big catalyst comes along. What is it that you are seeing in the market right now?
When I kind of take a step back and look at that longer term trend line of like productivity of the space, it's really been steadily increasing over time and almost exponentially, I think, in the last few years. So a few things are going on. Like number one, I think crypto has proven to be an incredibly resilient asset. And we're only 9 months right now off of some of the lowest and darkest times we've seen in the industry, kind of coming out of the FTX collapse and bankruptcy, but Bitcoin's actually up almost 100% from those levels back in November. So I think there's just this incredible resilience of the asset class that's really proven time and time again that nothing can really kill it. And if there was something that was going to, it was a bankruptcy on a global stage, and then a ton of regulatory fallout from that. So I think there was like this turning point in going back to March, where I think there was a strong kind of tailwind for crypto as an asset, when you saw some of the regional banks start to fail, like Silicon Valley Bank, Signature Bank, and Silvergate, where kind of for the first time people started to ponder and play with this idea of investing in an asset that has no inherent counterparty risk. And I think just that thought alone was kind of illuminated on a national stage here in the US, which gave, crypto as an asset class, I think, some momentum. Separately, I'd say we're starting to get some pretty meaningful like legislative clarity here, which is really encouraging. The House Financial Services Committee is in basically the process of advancing a bill that discusses things like regulatory classification, is something a security or commodity, things like stablecoin issuance and payments. And then, separately, Senators Gillibrand and Loomis are also working on their own proposal, thinking about things like consumer protection, registration requirements. So we're finally seeing this push from Congress. And then in addition to that, you got finally an XRP ruling in the SEC versus Ripple case, which was also, 3 years in the making. And the clarity we got was that XRP kind of at face value is not considered a security, at least to the Southern, district judge that made the ruling. And it really has to do more with the distribution, of XRP and how that process works. And if you can do it electronically or algorithmically or done via airdrop, then it's not necessarily a securities issuance. But if you go through the institutional sales process, then it is. So just getting some of this legislative clarity has been really helpful, I think, as a tailwind to the asset. And then lastly, probably the biggest thing is just the institutional support. I think we're starting to see the institutional growth kind of hit this exponential point, and that's going to put pressure on regulators and the government to really figure out the legislation piece. So, I think those things are all pretty meaningful tailwinds for the asset class generally. And so my view is that as these things continue to progress, it's going to be bullish for Bitcoin and ETH, I think, as just kind of the two major market cap digital currencies.
Let's stick with the institutions and the regulatory stuff. There are so many positive developments, but there is still also a lot of uncertainty that it seems like is still kind of a dark cloud for the industry. So how does that translate to institutional trading? And is what I've said, does that align with your observations and your experiences working with these institutions? And how do we get that volume back up in the trading?
Yeah, it's a great question. And I think, to your point, if you just look at, implied volatility in Bitcoin, we've traded down now to like yearly lows of, I think, 30 vols, where in the past, Bitcoin's traded at 80 to 100, implied volatility. So we've definitely seen, I think, a lull in, both volatility and also just general liquidity in the marketplace. And in addition to that, credit in the institutional digital asset marketplace. So I think all of these things make for like a pretty quiet trading environment right now. I think from my point of view, a lot of this has to do with, really the major collapse in market structure that happened, in 2022, where you had a lot of the just inherent fragility of the system was exposed. And, from that, there's a lot of learning lessons. Like there were certainly things about the previous market structure that were real and vibrant and thriving. And then there were parts that just weren't sustainable. And so when you have, a major drawdown and you have the collapse of one of the largest exchanges, those fragilities kind of become exposed. And I think we're working through that period right now. But I think a lot of things do need to change as well. Like what was real was the fact that there really was a two-sided market. And if you look at credit specifically, there was, market makers and traders that wanted borrow to go make markets on a variety of different exchanges. And there were lenders that wanted yield to, on their digital assets. And that was a $50 billion institutional market. And you had folks kind of sitting in the middle of that. What happened was the underlying trust of that system started to decay.
So we have had your CEO, Mike Ballensweig, on the show before to talk a little bit about Go Network. And it does sound like that is one of those efforts that can be applied going forward to this industry. And then it really all does come down to market structure and the separation between trading and custody. So I guess for our audience, please remind us what exactly Go Network is. And I do want to briefly congratulate you on your move. You were previously at Genesis. And so this is such an exciting thing to be picking up, especially as we do head into a new cycle. So what exactly is Go Network? What is it you were tasked with doing there? And how does that tie into everything that you were just discussing?
Yeah, thanks so much for the question. And, just to start, I am very excited to be joining BitGo. to really spearhead their efforts with Go. And as Mike Belshi has mentioned on previous interviews, we launched Go recently over the last few months, really as our way and our expression of de-risking the institutional crypto market structure while still providing capital efficient trading and settlement solutions to institutions. So the goal here is to really rebuild trust in the market, but from a product centric push, right? Like the way to rebuild trust is to build things that actually work and solve the problems in an innovative way. And I think when you look back to the previous cycle, a lot of firms were just really throwing their weight at the problem, right? Throwing balance sheet at it and trying to just, really establish themselves as a balance sheet player when we weren't solving for the real market structure issues. So, you can think of Go Network really as the bone structure, I think, for the next evolution of institutional trading in crypto. And it kind of boils down to one, the fact that BitGo is really one of the only few qualified custodians in the market. They've been around since 2011. And, we're obviously best in class in terms of having a regulated, qualified custodian, with insurance that is, super compliant and regulated. And then on top of that, the actual underlying technology that's going to kind of allow for these new novel ways of settling within a closed network between institutional participants.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, so we'll see you then.